we're recording this session, it should be available in the academy. We'll make sure it's available somewhere, of course. So today we're actually going to be talking, um, we're going to be explaining how you can take a macro structure and then how you can take it into the micro and actually execute your trade, right? Um, when I was starting early on, I had great macro analysis. Is that the word? Analyses. And I really would follow my moon analysis. Once Dylan put me onto the moon, I kind of went off the deep end with it. And what I was doing early on, which drew a lot of people to me, was I was predicting these big moves, these really big moves, right? Like I was mapping out UJ quarters before the moves, months before the moves, and then they would actually map out. And what I was using was the moon as well as some Fibonacci retracement on higher time frames. I don't actually teach Fibonacci for a reason because it can really become a subjective head case. And I try to stay with objective tools that will help us, you know? And truth be told, Fibonacci some of the most powerful shit out there. Are that 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 sequence, that pattern is in everything in nature, right? And it is amazing, but the way it can play in the market and you plot it on your charts, it can screw you over. So as powerful as it can be to help you, it can mess you up. So I personally just, don't teach that. But however, anyway, continuing on, early on, I really would do these macro moves and plot them out. And it got to the point where I could see them. And then people will be like, oh, great job in the chats or whatever. And, it ain't about the chats, but I wanted to show that I can analyze this on the macro and execute it on the micro because what's the point in having this great analysis if you can't trade it? The same. There are a lot of people that can do a good analysis, but can you actually trade it? And at the end of the day, as far as making money, if you can analyze on the macro, but you can't enter on the micro and make the actual money, what's the point? There are some companies that will hire you just to analyze for them, but we not necessarily doing that in Forex yet. I mean, we do have people that just analyze, but all of our people that analyze are traders. I mean, if you look in the academy, who do we have as a Forexia analysis? Luke. And Luke, one of the best traders we got going right now. He's hot, So it comes down to having a full, well-rounded game to make the best trader. The best trader can analyze on all time frames, on that macro time frame, that 4 hour. They can see traps on the daily, and they can enter on the 15. If they want, they can enter on the 5. They can enter on the 1. And that's what I like to see. When I see you do a daily analysis and your ass snipe a 1-minute entry, that's what's impressive to me because it just shows a whole trader, a full, well-rounded trader. And that's what I'm in the business of. Everybody can make a quick bag. Everybody can have a hot streak. But what makes a great trader? What's going to make that person that can not only just teach others, but can stand the test of time? It's all of these little things. So what would happen was I just would see the macro move, but I couldn't enter it. And what I had to learn was the traps, right? That's what helped me, is learning these traps on lower time frames. And yes, obviously understanding the multifractal nature of the market. That's always a tricky one to grasp. And to grasp that the market is a multifractal, you do need to grasp that it is literally a sine wave in a computer being manipulated. It does not make sine wave. It makes sine wave patterns, yes, by its nature, but the market is this, right? It doesn't just make this pattern. You say, oh, market structure showed a sine wave. No, the market itself is a sine wave, right? And it's also a multifractal. So what a multifractal is the same pattern being repeated over and over on different scales. Let's actually look up multifractal. Let's see what this is. A system is a system generalized of a fractal system in which a single exponent fractal dimension is not enough to describe the dynamics. Instead, a continuous spectrum of exponents is needed. Okay, so that's basically what the market is. They needed a way to manipulate these candlesticks, and this is the most effective way. No worries, Sam. It'll be recorded. We chilling. We up in here. So see you later, bro. So yeah, knowing those two fundamentals, that does need to be at your core, and that will help you from getting detoured, help you from seeing the market as purely random. You'll see the market as reacting to how it's manipulated based on its true nature. I can't pinpoint that message enough. So going back to our track, understanding the market is a multifractal, understanding that it is a sine wave. From there, I back test my ass off. I learn how all these patterns intersect. I learn the nature of the market. So let's see. What's an example of using multifractal knowledge to just get a truly in-depth understanding of the market? Like, let's take a look here. All right, let's say we have let's do it like this. All right, so if you see this, all right, what is this? These are two candles side by side. Just tell me in the chat, what is that? You see that in two candles, bullish, bearish, railroad. Simple enough, right? So let's say we're on the hourly. No, let's say we're on let's make it very clear. Let's say we're on the 30-minute and we get this railroad. Then we jump up to the 1 hour. Okay. What do you expect to see on the 1 hour? Okay. some of us are we're doing our thing today. So Emmy says he expects to see a doji. Right. That's exactly what you're gonna see. So we go up and then we go back down. So let's try to do this properly. Hopefully I'm calibrating this right. I don't want to do this backwards. That'll be embarrassing. Sorry guys, I kind of slept in today, so I'm a little silly this morning. Just feeling really happy. And I am happy with my trading week personally. Went really well. It actually went well in the beginning. Then I gave back a bunch of profits, and then I got them all back plus more, and I hit my quota. So I am happy about that. So look, this is what it may look like on the 1 hour. Okay. So why is this important? This understanding this, that a railroad on the 30 minutes where price pushed up and came back can be this wicked candle, this bearish wicked candle on a higher time frame, tells me that this is what? It's the same information. It's the same information. All it is represented differently through these candlesticks, as each candlestick represents a certain period of time. Okay. And why this is important is because once you start to really get this deep understanding, this is how you go next level. This is how people say, how did you do that? How are you so good at this? And the only way this comes is through experience. The way I found out this pattern equals this pattern is through experience. And yes, my teacher showed me this because Dylan really breaks down how these wicks react to these these highs and lows, and that will help you with this understanding. And we also have the candlestick Bible, but the deep understanding obviously comes through the back testing and the being in the market live as these things happen, because that shit imprints in your brain. And what I mean by that is, say you're in a trade, okay? Say you're bullish and the pair just shoots up 20 pips, okay? Then you see it shoot down. You are emotionally involved, especially early on. You are like, what is going on? Why did it go up? Why did it come back? And what you will likely do is end up looking at different time frames, end up breaking down the trade and saying what happened. And then you look on the higher time frame and you say, oh wow, they just stopped punting to the zone. What could I have done? You know, I could have moved to break even. I could have known it was a trap, whatever. None of that's important. What's important is you observed it so closely because you were going through that experience. And if your money is on the line, you are going to be observing closely, especially early on. If you just enter demo and you just left it alone, this may not apply. But after that experience happened, trust me, it's going to be instilled in you. And one other key point, say you had one standard lot and that was all you had in the account and you blew it, that can traumatize you. Say you had a 0.01 and you lost this and you were involved in a trade, that will still affect you emotionally. You can still get the same growth from that 0.01. It'll actually be better because if you go too crazy with the risk and it fails, it's gonna make you scared. And we're not in the scared business. So that's why that risk management is important. All right, so bringing it back to track. We're gonna keep getting distracted, but we'll bring it right back to our point. So now when we go to the higher time frame, we see these patterns. We want to get in on the lower time frame. We start to learn the multifractal nature of the market in hand with what the daily structure of the market. So we should all know daily structure, range, break high, break low. Okay, that is in a bearish market. Bullish market, range, break low, move. Okay, so this, you should see it all the time. You should repeat this pattern until it is stuck in your head. If you need to continuously draw it, when you see it on the charts, do so. Do so till you see it all day, okay? So look, range, break high, move. It can happen on any type of time frame. And yes, it is a pattern that the market maker uses, but this is what I want to make clear. I hope it's recording too. Let me see. Yeah, we recording. We good. So the reason this daily structure is so powerful, and we say, oh, daily structure matters so much, it goes back to what? The nature of the market. What do we say? It's a sine wave and it's a multifractal. So you can do head and shoulders, you could talk dojis, wicks, all of that, whatever you want to label a pattern, I don't care. That don't matter to me. What matters to me is the true pattern of the market. And you can blindly trade daily structure and have a great career. You can. But what I'm trying to bring, yes, Shane says sine wave at the core. Everything stems from that. Yes. And that's what I'm trying to bring to this, because when someone just tells you what to do and say, oh, trade this, wait till it breaks the high and drops low. You say, why? But what about this? But can I just do this? Let me try this. Oh, this happened. Oh, fuck. All right. So that's what's going to happen. Especially most of us are men. We stubborn. We got egos. We think we know better. We got to do it ourselves. That's part of it. Okay. That's in our nature. That's how we're designed to survive, to thrive, to pass on our genes. But we not in nature fighting for a woman to procreate our seed so we can continue living. We're in a place in civilization where we're trading from our phones. We've evolved, guys. So when we get on this chart, yes, and also I am reading the chat as we go. Sam said problem, reaction, solution, a Galilean dialect. So yes, this is the same pattern we see in all of nature. It is a pattern of human emotion. It is the pattern, okay? You know, sine wave is not just in the market. Sine wave is in everything. It's, you know, it's a mathematical wave that we use. Exactly. Heartbeat. You see it everywhere, right? So the reason this pattern is so important, you understand it. You understand that the market maker can do what they want with their liquidity. They could decide that they're gonna, oh, this one, they're gonna push up way up here, 100 pips, and then drop it, right? Because they have the liquidity to manipulate this sine wave, but it doesn't mean it's not a sine wave. So what Newton's law, what goes up must come down. Um, that's just in the nature of things, right? So what we do is master this pattern, incorporate it into our system, our entry system, our trading. If you're taking ECR, if you're taking safety, DCR, um, M and W, whatever, it doesn't matter. Let's delete everything. Okay, let's look at different entries we could have got on the 30-minute. No. First, let's go to a 4-hour analysis, and then I'll actually show you the trade I took. Okay. All right. So first thing I want to do is, what I like to do is kind of just see where price is. And we're going to look at this we're going to pretend this move didn't happen yet, because this would be the move that we caught. So around this area, actually, I want this. Let me just get back to how I like it. Okay. All right. So we see price is just loving this area. Um, Trap sellers, broke out, trap some buyers, played around, broke out, trap some buyers once more, came back. So it definitely been trapping buyers above this, turn this resistance support, right? So when we trade, and these are tools that may change in the future, sine wave is always going to be a sine wave. We're always going to have candlesticks, I feel. I don't think those things are going to change. But one thing I do feel that may evolve, which is evolving and which may change as the industry changes. Another key point, guys, we do want to have vision in what we do. We do want to think, where can our industry go? We want to have a mind that is just active. We don't want to say, okay, we found a quick lick, we found how M and W course, and we just do this forever. One day this might not work, but the players, the traders who evolve with the market, who just stay focused, who stay locked in, who stay, paying attention to all the subtleties, all the changes going on. If there's a new trader that comes around that has a new system that is killing it, I don't know, a teen trader comes out with FTB, FTR, at least go look at it and learn it. That doesn't mean you have to trade it, but you need to be keeping this open mind. This is a theme I'm repeating every week. We can't get comfortable. We can't get complacent. If you don't use it, you lose it. Let me continue. I'm going to check the chat. Let's kind of just continue this macro analysis. I think I actually want to go to the daily chat popping. Let's see. Amy said there was a key level at 99.25. Yep. And I used to be huge on key levels. I actually got Human on it, bro. But I kind of left them alone because it was doing something to me. It was making me put an expectation on the market, and I just had to leave it alone for me personally. And Khan was saying the music game has evolved insanely. Yeah, everything has evolved with the internet. Every art form, every medium, every way media is delivered, every way we interact. And we, like, for in the States, in North America, they just changed the stock trading to commission free on all these brokers. The game is changing. There was a time where you couldn't even participate in the market without being on an exchange floor and having at least 100K. We can get in with $10 on an Obama phone with a cracked screen. That is called a game changer. Okay, so let me look at this chart real quick because I did a lot of times, you know, we really get into the psychology, we talk, but I wanted to just show y'all this. We might end up having to even do like another session dedicated solely to entry strategies, right? So this why I like, look, the 4 hour then was not that clear to me, y'all. So for this trap, what I wanted to do, I went on the daily. So look what we see. Where is the little thing that let me put? Oh, I'm a little off today. Sorry, I'm so sorry, guys. I'm so blind. Okay, let me be nice to myself. I'll be kind. I'm awesome. I'm great. Just a little. Ah. All right. All right. Let's get through this. Let's get through the work here. What we got happening here, buyers being induced. I shouldn't have to say it. You should see this. This is what they draw. What do we say that the retail, I should have finished what I was saying. The tools that we're using today are going to be trend lines and support resistance traps. And these may change as the industry changes, as market maker changes their traps. Maybe they start doing, I don't know, vertical vortex traps, tornado traps. Who knows what they'll do? All I know is I will back test it and reverse engineer it, and I'll wait for everyone to get stopped out, and then I'm gonna go the other way. Okay. So at this point, everybody and their mama is gonna be buying. Okay, I don't care what time frame you're on. This bullish wick induced everybody. This day should have got everybody on the bandwagon. Okay, it was the 4-5-ish trend line tap, and it broke past this support again. Let's keep going. So still playing off of this area. Let's go to lower time frame. Point being, my view is they trapped this. This is a big ass trap. Big ass trap. Okay. Why they come there? This is a big ass M. Big ass M. Okay. M. Now, let's see. How much did price go past this wick? 10 pips. Maybe the spread, make it 20. 20 pip stop loss above that, you make it. Price came back, cleared the board. Okay. Price dropped. V3, 1, 2, 3. So we see a vector 3 candle, 3 4-hour candles. That doesn't tell me that, oh, this is simply a bearish trap. It tells me that this is market manipulation. 3 candles down. Okay. Why are they manipulating back to this area? Can anyone tell me why they would push the candles right? I mean, the answer is right next to you. But what type of trap are they setting? Let me see if anyone is lit. What type of trap they set in this area? When they V3 it on the 4-hour down to this area. Buyer's trap. Yep. Support trap. There we go. We killing it, guys. We killing it. Yes. That's a support trap. So boom, what happens? We don't go right down. We use Asian session. Look, this gray, that's Asian session. Accumulation. Bullish accumulation, right? And then look, this is that micro M. What is this? M. Okay. Also, what, man, why the market not open right now? I'm trying to eat, man. Got me mad today. Okay. So what also is this? You, you being very silly today. Okay. So it's being weird on a 4 hour, right? Daily structure, right? Perfect session timing. This is London, guys. What is this called? London effing breakout. So many confluences come together for a great trade. And now all this happens on the micro. Did I need to trade this 4 hour wick? No. Could I have bought this wick, sold this wick and placed stop loss above here? Yeah. And why would I do that? Because I know this trap is playing out. But me personally, nope. You can wait. You can wait. And what's going to happen? You're going to see this all the effing time, guys. All the freaking time. Price come back. We said it set the buyer trap off of this. And then once it gets back to this area where people can be buying off of, it is going to play around. This is where you actually can get an ECR. You actually can get an entry. And the reason why the market maker not giving you time to sell with them, they giving people a little more time to buy. And they showed their hand. And this is that sweet spot for us ECR traders. Now let's jump down. Long wick candles, Tuesday reversal, Jane says consolidate, induce high, drop. Boom. Yes. Okay. So now we're on the 1 hour. Getting a little more clear, right? And this is that move that happened during New York. This was the London breakout candle. A lot of people buying there. A lot of people. So now we see all this play out. We don't get in here necessarily when we want to get in. Now, USD CHF, I actually entered this one early Asian. And this is a pair I don't necessarily trade early Asian, but the structure was so clear. It was so clear, I could not pass it up, okay? So now, boom, we're gonna jump down to the 15-minute. In this, you should know where we actually can get entries with our 10 pip stop loss if we want to, or a little more, a little less, whatever. So now, boom, this move shifted. Look, we have our daily structure. We also have a nice micro trap. 1, 2, 3. A lot of people buy here. I want people to have reasons to buy so I could sell, right? Look at all these wicks. There is a reason the market maker spent an hour throwing wicks here, okay? There is a reason the market maker chose to accumulate here and why they didn't go back up. And sometimes they can go back up. You know, look at this wick here. This is actually the wick I waited for because I knew once I saw this wick, I knew market maker want to go down. They just want to clear the board. And you know what else happened here, which is not always common? What I saw on this pair, and I was like, yeah, I'm getting in with no fear. The spread opened up to 35 pips on USD CHF, and it stayed there. Other pairs weren't even going crazy like this. When that spread calmed down, I said, okay, that means the people that were selling had their stop loss, you know, right here. They got knocked out by that spread. What did I say, 35 pips? Look, the high right there was 27 pips. So the spread took out anyone who entered on that trap and moved to break even. Once that happened, and what do we call this? Human students, mine and human students, what we call that that candle highlighted in red? FU, yes, FU candle. Tablachi asked what broker I was on. I was using my CoinX account. Okay, so we're almost done here. We got less than a minute. You know how I drag things out. Look, I didn't I didn't throw on an EMA till 1 minute left. Boom. There you go, guys. That is how you enter. That is how you enter the effing trade. These are bullish candles that gave you. I actually got in on right here. And then look, ride the friggin' wave. Does it over and over. So I think I got this move for a good, like 50 pips. I trailed to my DMA. So yeah, it was maybe like 40 pips. But look, if you gave a little room, here go the reversal right here. Could have took it into the Thursday reversal. You start seeing this W pattern, you say, all right, man, I'm getting out. Looks like they're reversing, at least for a micro reversal. I'm not sure the overall direction. We ain't even gonna go there, but that is how you enter macro to micro. We're gonna do the same on UJ. We're gonna do more and more of these so we can see it. You know what I'm saying? We wanna see us go from macro to micro. And it's a little difficult to give the live examples, but we'll break down trades. We'll look at the trade earlier in the week. We'll execute it during the week. And then over the weekend, we'll review it. And then we'll just get better and better at this. Okay. Emmy says he sees an induction channel. I would agree. I would agree. Looks like we're inducing buys. We're not really going anywhere. All right, so we're out of here, people. Thank you for bearing with me. Had a lot of fun, and see you guys in the chat. Peace, brothers and sisters.